Alright folks, let's talk about a legend, a titan, the one and only Warren Buffett. This man isn't just an investor, he's a financial wizard turning everyday companies into gold mines for Berkshire Hathaway shareholders. How does he do it? Year after year, decade after decade. That's the billion-dollar question, isn't it? Today we're diving deep into one of his most powerful strategies, a secret sauce that keeps the cash flowing into Berkshire's coffers. We're talking about serious money, the kind that makes Wall Street sit up and take notice. The sheer scale of Buffett's success can sometimes feel overwhelming, almost mythical. But when you break it down, a lot of it comes from a core philosophy. Find great companies, buy them at a fair price, and let them work for you. This is the magic of passive income, and Buffett is the undisputed heavyweight champion of generating it. Now, imagine pocketing over $1.33 billion. That's exactly what Warren Buffett is set to do this year, in 2025, from just key holdings. The two companies are set to pour a staggering $1.33 billion into Berkshire Hathaway's accounts this year through dividends. These aren't just random picks. These are strategic, calculated positions that reflect Buffett's deep understanding of value and long-term market dynamics. Let's talk about Chevron first, ticker symbol CVX. This isn't just any oil company, it's a global energy powerhouse involved in virtually every facet of the oil and gas industry. Then we have Kraft Heinz, ticker KHC. Think ketchup, mac and cheese, deli meats, iconic brands that have been part of family meals for generations. Buffett's investment here taps into the consistent, predictable demand for essential food products, a defensive play that also packs a significant dividend punch. Chevron offers exposure to the indispensable energy sector with a history of dividend growth, while Kraft Heinz provides the stability of consumer staples with a very attractive current yield. It's a combination of perceived value, income generation, and a belief in the long-term prospects of these American giants. This is smart investing, plain and simple. Now listen up, because this is important. It's fantastic that you're here, soaking up this knowledge about how the Oracle of Omaha builds wealth. But reading is only the first step. To truly benefit, you need to engage. That means more than just passively scrolling. I want you to think, to question, to share your insights. Investing can sometimes feel like a lonely pursuit, staring at charts and numbers late into the night, but it doesn't have to be. There's incredible power in community, in sharing what you've learned and learning from others. When you comment on articles like this, when you discuss these ideas with fellow investors, you sharpen your own understanding. So I'm calling on you, right now. If you find this information valuable, share this article with your friends, your colleagues, anyone you know who's interested in making their money work harder for them. Hit that subscribe button so you don't miss out on future insights and deep dives. And most importantly, drop a comment below. Let me know what you think about Buffett's strategy, about Chevron, about Kraft Heinz. Berkshire holds a colossal stake, over 118.6 million shares of this energy supermajor. When Buffett makes a bet this big, you better believe he's done his homework and sees something special. Now for the really juicy part, the dividends. Chevron is a cash-generating machine, and it's incredibly generous when it comes to sharing the wealth with its investors. For 2025, Berkshire Hathaway is projected to rake in approximately $811.3 million in dividend income from its Chevron holdings alone. With a massive market cap of $238.49 billion, the company posted an impressive earnings per share of $6.93 and maintains a P/E ratio of 19.73. In 2024 alone, Chevron generated over $202 billion in revenue and secured a net income of $17.75 billion. What's particularly attractive to income-focused investors is its solid dividend yield of 4.89%. Currently trading at $136.70, Chevron stock is still trading at a discount, nearly 15% below its fair value estimate of $157. That gap may present an opportunity for long-term investors seeking value and stability in a volatile market. In 2025, Chevron increased its quarterly dividend by a healthy 5%. That kind of consistency is a hallmark of a truly resilient and well-managed company. It's no surprise then that Chevron constitutes a significant chunk of Berkshire's investment portfolio. So, what's the big idea behind Buffett's substantial wager on Chevron and the energy sector? It's not just about those sweet, sweet dividends, though they certainly don't hurt. Buffett's investment rationale reflects a fundamental belief in the continued, unwavering demand for oil and gas. Despite all the talk about green energy transitions, the Oracle of Omaha understands that fossil fuels will remain a critical component of the global energy mix for many years to come. Let's look under the hood at Chevron's financial engine. This company is pumping out serious cash flow. In the first quarter of 2025, Chevron reported a free cash flow of $1.3 billion. Now, if you exclude some of the more volatile working capital movements, that adjusted free cash flow number jumps to an even more impressive $3.7 billion for the quarter. And what did they do with that cash? Well, they paid out $3 billion in dividends. Chevron's management isn't just resting on its laurels, they're actively working to grow that cash flow even further. They have ambitious growth projects in the pipeline, and they expect these initiatives to add a whopping $10 billion in additional free cash flow by the year 2026. More free cash flow means more security for the dividend and more potential for future increases. Now let's pivot from the oil fields to the pantry shelves and talk about Kraft Heinz, ticker symbol KHC. This is another cornerstone of Buffett's dividend income strategy, and Berkshire Hathaway's involvement with this food giant goes way back. Berkshire, in a savvy partnership with 3G Capital, acquired H.J. Heinz back in 2013 for over $23 billion. They then orchestrated its monumental merger with Kraft Foods Group in 2015, creating the behemoth we know today. Berkshire holds an absolutely massive position, over 325.6 million shares. This isn't just an investment, it's a significant piece of the Berkshire empire, reflecting a long-term belief in the power of iconic food brands. And what does this massive holding in Kraft Heinz deliver to Berkshire's bottom line? Pure, unadulterated dividend income, that's what. We're talking about a projected haul of over $521 million in 2025 alone from KHC dividends. Kraft Heinz currently sports a very generous dividend yield of over 6%. In a world of low interest rates, a 6% yield from a company that sells products people buy every single week is incredibly attractive. It's a testament to the cash-generating power of established consumer brands. Now, let's be straight with each other. The Kraft Heinz investment hasn't exactly been a home run in terms of stock price appreciation since the big merger. In fact, the stock has significantly underperformed the broader market, leading some Wall Street wise guys to label it as one of Buffett's less successful ventures. But here's the thing about Warren Buffett, he plays the long game. He's not easily spooked by short-term market sentiment, especially when there's underlying value and a solid dividend involved. With a market cap of $32.02 billion, the company reported earnings per share of $2.21 and a notably low P/E ratio of 12.10, suggesting it could be undervalued relative to its earnings. In 2024, Kraft Heinz brought in $25.85 billion in revenue and earned a net income of $2.74 billion. What really stands out here is the dividend yield, sitting at a generous 5.99%. And at its current trading price of $26.73, the stock is dramatically undervalued, trading over 81% below its fair value estimate of $48.43. For value and dividend investors alike, Kraft Heinz could be a compelling opportunity hiding in plain sight. There's certainly been some chatter and speculation about Berkshire Hathaway's future with Kraft Heinz. Two of Berkshire's representatives on the Kraft Heinz board are scheduled to depart, which has fueled rumors that Buffett might be looking to reduce his stake. Adding to the intrigue, Kraft Heinz itself is currently in the midst of evaluating strategic alternatives aimed at enhancing shareholder value. This could mean a lot of things. They might be looking to sell off certain company units or brands that are no longer core to their long-term vision. For investors, this period of strategic review could be a catalyst for change, and potentially for a re-rating of the stock if management makes the right moves. But amidst all this speculation and strategic maneuvering, what about the dividend? Is it safe? Well, according to the numbers, the answer appears to be a resounding yes. Feeling inspired by Warren Buffett's incredible ability to rake in billions from smart dividend plays? Are you thinking, I want a piece of that action? Well, guess what? You absolutely can learn the principles that guide the Oracle of Omaha. While you might not become a multi-billionaire overnight, you can definitely adopt the strategies of value investing to build your own robust income-generating portfolio. That's why I'm thrilled to tell you about our exclusive value stocks investing master course, the Buffett Blueprint. This comprehensive course is designed to take you from novice to knowledgeable, teaching you the exact techniques used by legendary value investors. We'll break down how to analyze financial statements, how to identify companies with durable competitive advantages, those all-important moats, and how to spot stocks trading below their intrinsic value. Imagine being able to confidently pick stocks that not only have the potential for significant capital appreciation, but also pay you a steady stream of dividends while you wait. Think about building a portfolio that works for you, generating passive income that can help you achieve your financial goals. Click the link in the description below to learn more and enroll in the Value Stocks Investing course, the Buffett Blueprint today. We even have a special limited time offer for our loyal readers and viewers, so don't delay. Invest in yourself, invest in your knowledge, and start building your own dividend dynasty. As we've seen today, Warren Buffett's strategy of investing in high-yield dividend stocks like Chevron and Kraft Heinz is a powerful testament to the enduring principles of value investing and the magic of passive income. Over $1.33 billion flowing into Berkshire's coffers this year from just 2 stocks. That's not luck, that's strategy. But learning doesn't stop with one article or one video. The market is constantly evolving, and staying ahead of the curve requires ongoing education and access to timely insights. That's why I want to invite you to take your investing game to the next level. Sign up for our Patreon group where you'll receive premium stock tips, in-depth market analysis, and actionable investing guides delivered straight to your inbox. And don't forget the power of community. I strongly encourage you to join our vibrant investing community. Engage with fellow investors, share your successes and challenges, ask questions, and contribute to the collective wisdom. The journey to financial freedom is often easier and more rewarding when you're surrounded by like-minded individuals who are all striving for the same goals. So let this be your call to action. Don't just dream about financial success, take concrete steps to achieve it. Link is in the description. Don't forget to hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. See you in the next one.